In the currency quadrant, taking a look at continued weakness in the euro currency. The euro has now fallen in 12 of the last 14 sessions for a total move so far of 2.88%. And today, after the New York cash session, the December euro currency pushed below the 200-day moving average for the first time since August 2nd. The 200-day moving average can act as very strong support, but if price action closes below it and shifts significantly below it, the euro will likely stay in a sort of sell the rally mode until it could move substantially back above it, especially if other moving averages start to settle below that 200-day. The high today, 109.29, that was up 13 basis points, so a little bit more than a tenth of 1%. The low, 108.87, was down 0.26%, so a little bit more than 1/4%. And at the cash close, we were still down over 0.2%. The inflation rate in Europe has come down significantly, just like in the US this year, with the September preliminary year-over-year core reading falling below the ECB's 2% target on October 1st. That was actually the lowest since 2021 for that core year-over-year CPI. The revisions are due out tomorrow before the European Central Bank has its meeting. Yes, there's a rate meeting tomorrow, and the market is expecting a 25 basis point rate cut. It's basically baked in to the markets right now, but they could surprise. If they were to surprise, you could see extended moves for the euro currency because you're seeing a shift in probabilities for the US Federal Reserve from a fight between 25 and 50 basis points at the next meeting, which is in November, to a fight between no move and 25 basis points. Right now, 25 basis points is in the lead. So that sort of rate differential tends to drive these short to medium term moves. And right now, it's part of what's driving the euro quite a bit lower over the last few weeks.